we're at the point now where for a company that they're doing a lot in a foreign country, they've got some people representing them, and inevitably they're going to start thinking about, do I need a permanent establishment or a foreign entity? And I think that probably one of the biggest questions, the most often questions we hear from clients is, what triggers a presence in a new country, and when do I need to create a permanent establishment? So maybe Mike, you could touch on that.
Yeah, thanks. Yeah, and partly as Bill discussed, the most common driver for considering having a foreign entity is going to be employment decisions. Certainly sales, vendor contracts, or due to specific customer requests, that could also be a driver. But the reason is because each of these creates some connection or potential activity in a new country or a new market. And once that occurs, a permanent establishment, or PE, can result from the presence of these employees or contracts in that country. So it may be that you want a presence, it may be that you don't want that presence, but it arises as a function of these activities, and it potentially subjects the home company to local income taxation. The concept is really similar to Nexus that we have in the United States for state tax purposes, which is based on some combination of payroll, sales, and assets. But it also is governed by income tax treaties. So where you have a treaty in place, there may be a specific definition or a limitation on the determination of PE status. For example, just holding inventory in a country, or just having product sales into that country, or providing certain marketing activity by themselves may not create a PE. However, if you have all of these sort of factors at the same time, inventory, sales, and activities, well, then you could have a taxable presence. And the general issue there is that you could be subject to income tax in some cases based on gross margin, where the country could eliminate or exclude certain deductions, particularly indirect costs. And in some cases, such as in the United States, deductions may be disallowed if a timely tax return is not filed.
Thanks, Mike. And I know you talked about creating the entity, and I know this is an important thing for a company to get right, and obviously, as you said, has implications for tax exposure and overall cost. Can you explain some of the implications of the type of entity a company creates? So maybe looking at the difference between, say, a rep office or a branch office and a subsidiary?
Yeah, sure. In particular, a rep office is the same as a branch in some respects. However, generally a rep office is considered as not engaging in the type of activities that would rise to the level of a taxable presence or a PE, either under treaty or local law. A branch structure, on the other hand, often has some appeal, generally because of perceived ease or limited costs in it, and it actually provides some registration and requires you to meet some registration requirements in the country. But I would say that also due to tax, accounting, and legal constrictions, there are relatively few situations where a branch of a U.S. company would be preferred over a corporate entity, given a variety of different factors, including the high U.S. Corporate income tax rates, issues related to foreign goodwill, the ability to check the box on foreign corporations and treat them as a branch for U.S. purposes, various transfer pricing considerations. In most countries, in fact, the tax rates of branches and corporations are very similar. That's been really equalized over the last few years in most locations. But quite frankly, one of the biggest issues is limited liability, and limited liability risk for U.S. U.S. companies with branches overseas is generally one of the reasons that you see that form not being used as often as you had many years ago.
And actually, if I can elaborate on that also, what we like to let people know is, with a branch office off the U.S. parent, as you hire employees, should there be any type of employee discrepancy, that employee is coming straight after the U.S. parent and all of its holdings. Whereas if you set up a foreign subsidiary, a simple cost plus subsidiary, it creates a firewall and really helps limit the damage.
Yeah, I want to add also that one other sort of technique that you see quite often is beyond corporations in local countries is the use of holding companies. This is particularly popular and or necessary in countries like China or India, where they have taxation. It's called taxation of indirect transfers of shares. Also, just where you have significant intangible property, the ability to manage your IP portfolio and separate the ownership and goodwill issues between countries is important. And finally, certainly where you're investing in joint ventures, it could be important because you may not be able to control the movement of cash and other profit-making activities.
Thanks, Mike and Bill. And I think it's safe to say that the vast majority of the clients that we work with, particularly on the tech side, do elect to create a subsidiary rather than a branch. Along with creating that entity, there's other registrations the companies need to think about. And one I know that comes up quite a bit is value-added tax registration, particularly in Europe. Maybe Mike, you could touch on what some of those other registrations are, and maybe a little bit on VAT specifically.
Yeah, and then VAT, as you mentioned, value-added tax. It's, again, similar to maybe the concept that we have in the U.S. of sales tax, but it's typically applied at all levels of the transaction flow or the stream of commerce, if you will, whether it's the purchasing of products or the resale between various entities. It's really something that not only is it required to be registered for, but the accounting for it in terms of the collection and the remission of the taxes is something that is a very, I'd say, serious event throughout Europe, and something that takes quite a bit of systems management in order to make sure that you're tracking all these transactions appropriately. Further, I would say, depending on the country and the local customs, you may have requirements or preferences for trade registrations, business licenses, Chamber of Commerce, or if you're importing product, obviously you have to register for customs and duty purposes. Generally, the evaluation of what type of form of registration and the extent of the registrations and licenses would be done at the time of the incorporation.